All right, what up, what up, what up? So, welcome back, of course. We're going to go over some aspects of, we're going to go over to, hold on. We're going to go over the aspects of being a trader and how to be successful. We're going to get into the nitty gritty of it and how to build a solid trading plan. I know if you clicked on the link, you're like, hey, how do I get a solid trading plan? And a lot of people don't know. I noticed a lot of videos as through the years that I've come across as I've been on my trading journey. A lot of traders or a lot of people in the industry say, hey, build a solid trading plan, but they don't actually show you how to build it step by step. And so I'm going to place the link down below of the Microsoft Word document of exactly, and you can take it and use it for whatever you want to use it for to help you build a solid trading plan. All right, so we're gonna, before we get into that, we're gonna go over a few things about having a structured trading plan. And not only keeps your emotions in check, but it also keeps you disciplined and consistent in your trading your trading plan. If you've seen a video before, you know we talked all about that. I'll break down the key components you need to include in your trading plan, like entry, exit rules, risk management, and journaling, so you can trade with more confidence and clarity. All right. So let's get into why you need a trading plan. All right. A trading plan helps you control the emotional side of trading. All right. And helps you plan and reduce impulse decisions. All right. So think about it. If you have a legit plan, when you go to do something, you can go step by step by step. You get what I'm saying? Instead of free winging it or freelancing or winging it, you know, you'll have a more solid plan. Okay, number one, look at the higher time frame. Number two, is it over my 20 period SMA? And the benefits of being consistent, I'm sorry, the benefits of a trading plan is consistency. Think about it. You have your trading plan, you look over it every single day, so you know you're not deviating from your plan because you're consistent. Step one, step two, step three. All right. And then you look at it, gives you more structure. All right. And with anything you do, when you want to level up, you always want to have structure. You don't want to have organized chaos. I've heard a lot of people when I'm coming up in the military, they like, hey, we effective, we straight, we get the mission done, but we organize chaos. We all over the place. And at the end of the day, it might work once or twice, but you want to be organized. You don't want to have organized chaos everywhere. And then also, it holds you accountable. All right, because when you jump in trades, and if you don't follow your trading plan step by step, it can actually hold you accountable. When you go back and you do your review at the end of the week or the end of the month, you like, okay, I lost this trade. And then you can say, hey, all right, I didn't follow step 2. I didn't follow step 5. I didn't follow step 7. And then now you can write that down. And it's like, okay, I know next time I'm not going to break these rules. I'm going to follow from 1 to 10. All right. But the thing about it is as well, if you follow your trading plan from A to Z and you still lose, it's okay, because it happens like that in the market. You know what I'm saying? But at least you followed your trading plan to the T. All right. So again, why you need a trading plan is consistency, structure, and it holds you accountable in trading. Trust me, these are 3 aspects you need to continue to build your trading success in the game. All right. So we also looking at what are the key elements of a trading plan. All right. And so we're going to go over that in a second. But we're going to go over entry, and don't have to write this down yet. I want you to write it down whenever we get started. All right. Entry and exit rules. All right. You want to have clear entry and exit rules. You know, hey, the second candle low on the buy, I'm going to enter here, look at the ATR. Here's my stop loss and my take profit. All right. Define clear criteria for when you enter and exit trades. We just talked about that. All right. So we're going to go over examples here shortly of clear and entry and exit rules. And also, if you see my previous videos, I go over that verbatim every single time. It doesn't change. All right. So think about this. Also, when you enter into trades, you got to look at risk management. Risk management is totally key. All right. If you go to my FS Books risk calculator, it'll have a one in there for you, so you don't have to second guess. All right. And I'm going to emphasize the importance of position sizing and stop loss placement. All right. You just don't jump in the trade willy-nilly and without having your position size. All right. Because on the daily time frame, when I trade, my take profit and stop loss might be 150 pips. And if you have a smaller account, you can't do a one lot. You can't do excuse me. You can't do a dollar lot. You can't do a $5 lot. All right. So you got to look at my FX books, and we'll go over that in a second. You have to clearly define your exit trades, but risk management. All right. So the journaling trades. All right. Always journal your trades, because if you journal your trades and you win or you lose, all right, it'll be documented, and then you can put on the side, hey, I won this trade. I followed all my rules. I won this trade and I only follow 1 through 5. All right, and you can annotate, hey, I won, kudos, but guess what? I need to follow my trading plan. Or I lost. I followed my trading plan to the T, but lost. It happens. You just annotate, put it on the PDF file or PowerPoint like I do, and then go from there. All right. So in your journal, right? You want to have in your journal like your trade setups, your emotions, your outcomes, things of that nature. Put that all in your journal. Okay, you get what I'm saying? And so we're gonna go over this. Let me go over some key rules as far as risk management. And let me pull this up, my FX book. All right, and I'm gonna show you exactly how you can go over this real quick. And let me pull this up on the screen. All right, my window to the wall. All right, here we go. If you look right here, they say, GBP USD. All right, then you have, let's say let's gonna work on $1,000 account size. Look, we got 150 pip stop loss. Put 1%, calculate. And if you look right here, that is 0.01. All right, lot size, 150 pips. And a lot of people always say, oh, well, you can't trade the daily time frame because if you got a small account, yes, you can still have a smaller account. And I'm thinking on my end is that a smaller account is 500 to 1,000. That's the smaller account. All right. And then we look right here, it's still the same thing. It's $5. So basically you do a 0.01. All right. And 1%, even on this one, you can up it, to $10. Let's go 5%. Look, that's $25. All right, on the 150. So you can still make profits from that. All right. Hope that made sense to you guys. All right. Hope that made sense to you guys. All right, let's move on. All right. So that was key elements of a trading plan. You got your entry and exit rules. I got defined my clear criteria when entering and exiting trades, risk management, and also have technical and fundamental analysis. Technical and fundamental indicators. If that's what you trade, all right. I'm going to emphasize the importance of a position sizing. All right, and let's move on. How to stay disciplined and stick to your plan. All right. So I'm gonna say this. All right. The importance of reviewing and adjusting your plan. All right, how to stick to your plan. Let's move on. Let's do this whole thing, right? Let's move on into the trading plan. Let's get into the nitty gritty of it. All right. I'm not gonna do a 10-minute rant today because we got some things to take care of. All right. And let's move this up. My bad, guys. Let me move this up and let me share my screen. All right, and go from there. And boom. All right. So go down to let me write this down real quick. All right. I even take notes while I'm doing my my videos. All right. Always taking notes. All right. So write this down. You got your trading plan, you got your trading goals, and stop if you need be. All right. I'm gonna try to post it down below. And then so far, if you liking the video and the content, make sure you hit the like button and hit the subscribe button and hit the bell for notifications if you like the content that I'm throwing down on here. And also put all gas, no brakes if you listen to it, or if you made it to the 9-minute mark, 10-minute mark, make sure you put all gas, no brakes. All right. So we're gonna go over trading plans, right? And let me see if I can put this a little lower. All right. So number one is primary objective. You got to achieve a consistent probability, be focused on high probability setups and risk management. All right. Target monthly profit 5 to 10. All right. That might be a little bit high. I understand that. All right. But you can make it to wherever you want to make it at. All right. This is not specifically mine all the time, because making 10%, might be a little hard some months. 5% making it might be a little hard some months, especially since I trade the daily time frame and I don't risk more than 2 to 3%. All right. So you can put 1 to 2% on your account. It's up to you. All right. I'm not here to debate, what you're going to put on it, or if 5% is unattainable every month. I don't care about nothing. Make it whatever you want to make it. All right. Long-term objective, grow accounts steadily with focus on preserving capital and maintaining disciplined trading practices. All right. That's all part of your trading goal. All right. Now we're going to move on to number 2. Stop it when you need to, if I'm going too fast. All right. Market overview. You got your markets traded, Forex, indices, whatever you're trading, put it there. Time frame. I focus, let me put this, I focus on daily charts, but review the weekly, monthly charts for trend analysis. And I also use on TradingView Screener. All right. For those who don't, let me break it down. Let me put this in here so you guys are not confused. TradingView Screener. All right. Let me see. TradingView Screener. All right. And in the sessions, I trade at the, I trade at the close of the candle, 5 to 6 p.m., 4 p.m. Central Standard Time, daily time frame trading only. I only trade the daily time frame trading only. All right. My entry criteria, I use the technical indicators. All right. Technical indicators. I use the 20 period moving average. Right here, 20 period moving average to identify the trend direction. I use the ATR. That's the average true range. All right, average true range. All right, you can either use the 5 period ATR or the 14 period ATR. All right, support and resistance levels to identify the key levels on the higher time frame, the key price levels. All right, that is my entry criteria. All right, conditions for entry. All right, on my long position. All right, let me do this up so you can see. All right, long position. All right, boom, and let's underline this. All right. As you know, if you've seen my videos, all right, my two bullish candles must break the 20 period moving average. No wicks touching that. All right, enter on the second bullish candle or the second bearish candle. It depends on if we're going short or long. All right, and then I use the 5 period ATR to regulate whether I'm doing to regulate my take profit and my stop loss. All right, and that's based off the ATR. And once I have that, right, I go to my FX book and I calculate, okay, this was 150 pip on the ATR. All right, I go over here, I risk 1 to 3%, and then I enter the trade. All right. So the exit criteria I just explained is pretty self-explanatory. I do 1-to-1s because I trade 30 plus pairs, so I don't need to go into a 1 to 2 risk reward ratio because I trade the multitude of pairs with the proper risk. So all I have to do is go for 1-to-1 risk. So if I lose 1 and lose 2, I might have 14 other pairs that I would risk properly and made that my success rate a higher success rate. All right. So I'm gonna say this anyway. Set a 1-to-1 risk to reward ratio for each trade. IG example. If risking 100%, I aim to make 100%. I mean 100 pips. If I risk 100 pips, I aim to get 100 pips based off the 5 period ATR average true range. All right, my stop loss. I place my HDL based on the average true range, 1-to-1 risk ratio. I just explained that. All right. Now here are some exit rules. All right, when the price hits the predetermined TP, that's the exit rule. All right, I'm probably not watching when it does hit TP because I jump in the trade and I close the computer. All right, I do exit early if I come at 5 o'clock and I see that last candle has overtaken. Like if I'm on the bearish time frame and then the next candle engulfs the other candle and it goes over half my take profit, close to not take profit, my half of my stop loss. then I might get out at half the price, and then just put a pennant order again at that actual price again. So if it does swing back down in my direction, I will gain back what I lost to begin with. Or I might just not even get in that one anyway, again, the rest of the month. All right, my risk management. All right, risk management is key. Like, you can have an outstanding strategy, but if your risk management is bad, it's going to negate that whole strategy to begin with. All right. All right, risk per trade, risk no more than 2% per trade based on my balance per trade. I technically only have the risk. I have a big enough account size where I only have the risk 1%. And sometimes I risk 0.5% because if I'm in all these trades, I don't want to risk 1-to-1, 1, because then now I'm over risking my account. It depends. All right, position sizing. All right. Calculate the position size based on 1 to 2% risk per trade relative to your stop loss. If you're risking 100%, use the position size that results in $100. If you're risking $100, use the position size that will result in $100 loss if my stop loss is hit. All right, daily stop loss limit or monthly or weekly stop loss limit. So honestly, I don't trade on it. I don't trade daily, like as far as daily. I put monthly, right? I don't trade. I'm not a day trader. Okay, so it would it would be my monthly stop loss limit. Stop trading for the month if a cumulatively loss reaches 4% of my trading balance. So since I'm trading a daily time frame, if I reach my 4%, total of loss, I will get out. I will stop trading for the month. All right. So the next one is, so we're gonna go over this real quick. So number 1 is trading goals. Number 2 is market overview. Number 3 is entry criteria, and of course with conditions for entry. But number 4 is exit criteria, and then you have let's go over that. We went over that before. Then you have your stop loss. You have my exit rules, and number 5 is my risk management. Now number 6 is a trading journal. I advise you, if get any kind of a book or tablet. Or I have another one in the back that I actually ordered off Amazon. I can put the link down below in the description. All right. Keep a log of all the trades, including date and time of your entry and exit. All right. Currency pair or asset traded, instrument traded, trading size, entry and exit prices, reason for entering the trade, all right, outcome, profit and loss, all right, emotions felt during the trade, all right, i.e., anxious, confident, etc. What went well and what can be improved. All right, those are the biggest thing you want to write for every single trade when it closes out, or even before it closes out. When I jump in the trade, keep a log of the trade, entry and exit dates, and all that good stuff. All right, so moving on to review and adjustment. My weekly review. Analyze this past week's trades for patterns. Did you follow your plan? Adjust entry and exit conditions if necessary. I always tell people, don't change your strategy. Adjust your foxhole. All right, that we say that in the Army. Just means implement not new indicators. Implement things you've learned and say, okay, you know what? I'm gonna enter a little bit early here because I'm gonna enter on the retest here because I know on this pair it breaks through, but also retest afterwards. Those are the things you have to have in your journal for these pairs. All right, treat trading like an actual job, like a business. You have to look at all these analytics. That's the way you'll become successful. Yes, it is. Regardless of what you're told, you're not going to use this as a hobby and think you're going to make money. All right. That's with anything, or be successful. All right. Analyze this past week's trades. Did you follow your trading plan? All right. Adjust entry and exit conditions if necessary. Again, we just went over that. Reevaluate risk management parameters, increase or decrease per trade. All right. Now your monthly review. Check progress towards trading goals. Look at the past month. How did you follow all your plans? Did your account grow? Were you consistent? All right. Adjust goals and strategies as needed. All right. And also, number 8 is big as well. Mindset and discipline. All right. You got to have some psychological preparation. Stay calm and avoid chasing the market. Stick to your plan. I know sometimes I come in the market, I'm in a trade, and I'm like, dang, hurry up. I'm trying to get in this trade. But I got to stay calm. And since I trade on the daily time frame, I have to wait till I have my setup. because if I don't wait for my setup, it would always backfire and end bad for my trading account. All right. Also, accept losses as part of the process and learn from them. All right. If you trust me, it'll work in the long run. And your trading hours. Only trade when feeling clear-headed and focused. Avoid trading with stress, fatigue, or distraction. If you have a 9 to 5 and you coming from work and you're extremely exhausted and you can barely stay up, boom, boom, bam, you don't want to jump on the market and start looking for trades, especially if you're looking for trades and you have sleep. Doing this, you're gonna end up in the wrong spot. All right. So let's remove that. I hope everything was basically clear for you. All right. And then let me go over this real quick. All right. So hope everything was clear for you guys. All right. So just to recap on having a trading plan, it is key. It is key. All right. For if you want to be successful in this game, you definitely want to have a trading plan. And I'm gonna link this trading plan in the comment section. All right. And I always encourage you to create or redefine your plan and using the tips provided that I provided. Let me know if it's not, if I forget to put it in the description. Let me know if you made it this far. Say all gas, no brakes if you want the trading plan. I can send it to your email directly. All right, make sure you join the Discord. I forgot to say that earlier. Make sure you join the Discord as far as wanting the trading community. I'm building up my trading community, and let me see if I can show you this real quick. Let me show you. I'm growing, and let's move it over here. Let me move this off real quick and show you guys. All right, and boom. Oh, I thought it came up. My bad. Here is my group, All Gas No Brakes. I have some people. I'm growing right now. I have a good 9 to 10 to 12 people in there. All right, and so as you can see on the left side. All right, and let me move this over some. Let's see. All right, as you can see right here, I have my watch list. I have my YouTube videos up here, so it always be accessible. And I have my study material where I put all my pairs, and then I have my PowerPoint slides in here, the strategies. I put the trade winners in here as well, the trade losers this month as well. We've had 14 wins and 2 losses. All right, so that's the biggest thing. Come by, and we definitely will learn together. I do Zoom lives for trading calls, trading analysis on Sunday night and Wednesday. All right, other than that, all gas, no brakes. Make sure you do your trading plans.